and you have a program today?
Hello. No, I do not have a program. Am I supposed to say something?
Oh, okay.
Yes. Thank you, Scott. Hello, Hey, everybody. Welcome to the Trade of the Week, staple for Tuesday after the market, where we kind of focus our content on the trade of the week and what happened in the markets today and what we might be doing to combat certain said environments. So let's begin. I will click through the second slide here. Well, the old lawyer disclaimer reminding people that we are not a registered investment advisor. We are not a broker. We're not in the business of giving out financial advice. We're software and content providers. And so we're going to talk about our platform, some content, some ideas, but anything you hear or see today should not be construed as personalized financial advice to you and your family. You got to seek out the guys that get paid for that and took all the right tests for that. So that out of the way, see a lot of familiar names in here. Good to see. How did I go backwards? I want to go forwards. Familiar slide for all you regulars that I just mentioned that I see you, but we got to remind the new people that in joining Trade Ideas, you're joining a very comprehensive software platform, and it's not learned in 1 or 2 or 3 days. It's got a bit of a learning curve to it, and we recognize that, and we do our best to provide as much onboarding and concierge service as possible to keep people immersed in the program and learning and getting their questions answered. Primarily, the join the free trading room here is a screenshot of Barry Anderson's live room. He's got hundreds of people in there every day. And guess what? This is a really top-notch trading room based on the feedback we get, and it is free. So free is a really good price. I'm sure some of the other chat rooms out there that are good are not exactly happy about competing with Barry and his excellent content for free, but it is what it is. And it's available to anybody. You don't have to be a subscriber to Trade Ideas. You can join free and just come in and watch and learn and ask and kick tires and ask questions and see if this is something that would work for you. Right now, we're in the middle of our afternoon, what we call our marketing webinars, the 2 o'clock Eastern time slot. And so yesterday was myself and Jamie. Today is myself talking about the trade of the week mainly, with Andy helping me. Tomorrow is Dan Merkin, the CEO, and Brad Williams, the technical officer, make sure everything's flowing correctly. So those guys are always having their finger on the pulse of what the product's doing, and they're usually 3 months downstream, kind of giving us a glimpse as to what's to come. And then the trading studio back on Thursdays at 2 o'clock with Andy. He'll go through some content that he finds relevant for the day and takes your questions and answers, and Jamie helps him on that day as well. And then Friday, we're keeping this open for perpetuity. It's the 3-hour come one, come all Q&A technical support forum. This is perfect for people who may have just signed up today or yesterday and you're not ready for support yet. There's some backup on the one-on-ones, but that's why we created a 3-hour open forum for anybody. And again, you don't need to be a Trade Ideas user. So if you've got the product and you've got a short list of questions and you really want to get going out of the box quickly, the Friday support sessions are great because you can come in and ask questions and we can demonstrate visually to you and kind of show you where the areas of understanding are that you're still looking for help on. And that's every Friday from 11 to 2. And of course, that's free as well. A brief mention, we talked a lot about doing one-on-ones in the past. As you all know, we're growing by leaps and bounds, and the one-on-one sessions are not really any more our highest and best use here for the guys doing the one-on-ones and then training only one person, because we're getting quite the backlog and that's not good. And so we want to open up a different type of training, and you'll be hearing more about this. It should be starting next week or early March. It's going to be more classroom sessions, group setting, so a basic class, another basic class, an intermediate class, and an advanced class all in 1 week, Monday through Friday. So there's going to be a lot more opportunity for education coming really, really soon as we do eventually phase out the one-on-ones. It was great when we were a smaller company, but the economies of scale are just not allowing us to make that efficient use of our time. So we're moving forward to a more group setting. So keep an eye out for that. Subscriber growth, again, everything I'm talking about here is one of the reasons the subscriber growth should be off the page up here when we update it. But we thank you all for your comments and your love of the product. We love the product as well, and this data point certainly illustrates that it's getting sticky and it's catching on out there. Okay. Real quick on the question, Andrea, it just popped in, so it kind of caught my attention. We don't have a news alert. We don't have a news wire. We're not in the business of news. There are a dime a dozen out there, and we're in the business of data. Personally, I use Twitter with a hashtag and the symbol right across it, and that will bring up usually what's going on with news. There's a lot of great news people you can follow on Twitter that are free accounts. For instance, Zero Hedge is going to give you macro data market news within probably 10 seconds of release. So in my opinion, in this day and age, it's not really the best use of your dollar to go out and buy a news feed, considering all the content that is out there and available. Okay, going forward, Brokerage Plus is getting ready to come out of hibernation. It's been in beta for a while, but this is not for the newbies. This is not for the untrained. This is for intermediate, advanced traders who've been trading markets. They understand risk, they understand markets, and they're trading their own alert configurations. The most popular question is, well, I can just hook up and trade Holly, right? Well, no, it's proprietary, and we're kind of really keeping that a slow development as to who does that and when. But for the Brokerage Plus tool, any scan that you have that you like, you back tested, and you have a good amount of confidence in, the next step can be automating it. And we have a program with Interactive Brokers where you can sign up and have trade ideas linked to Interactive Brokers. You can do one-click trading, or you can do fully auto trading, which is really the most advanced. And it's kind of the way the market is slowly drifting towards, but we'll see. Check back in a couple of years. All right, so we'll begin here shortly. Let's see here. Oh, on Twitter, I mentioned a name called Zero Hedge. I'll write it in the chat. Some people don't like Zero Hedge. They think he's a bit of an alt, conspiracy fringe guy. But the guy, or the group, I should say, they are spot on with quick release of info. I just typed their name at Zero Hedge into the chat window. If you're on Twitter, give that group a follow. They're a very popular blog. They're a very active blog. But as I get into a couple of points here, when we go into the market recap, I basically got my information from Zero Hedge. So to swing all the way back, I don't really think there's a need in today's markets in technology and free open content source to go out and pay for a subscription to a newswire. All right, so as we get forward here in our content today, again, no man is better than a machine, okay? But no machine is better than a man who also has a machine. So man and machine is really the theme that we have around here going forward. That's why I continually harp on the slide, not to mention the author of that quote, Paul Tudor Jones, is a very big hitter and very well respected in the trading world. And so if he agrees with that, we certainly agree with that. That's the path that we're on. So I just want to kind of spread that word. Okay, so here's today's agenda, February 27th, market and the Fed. I'm going to show you a couple things of interest. The Holly recap, kind of a different day. We're going to take a look at what was working today on the AI. The trade of the week took a little while to trigger yesterday, but eventually did in the afternoon. It's Under Armour. Talk about the genesis and the thinking and the curation and what went into that particular pick. And then based on the market, as we're going to talk a lot about, the market is not what's the word I'm looking for, in the semblance right now. The market's in a very noisy, agitated mood right now. It's not finding, let's just put it this way, it's more of a mosh pit. It's not really the waltz that we had coming into February. So how do we combat that? I've got some ideas, back to some quick hit tactics. Bouncers in particular is one of the scans we haven't talked about in months, honestly. I've been more focused on the swing trading side, but I want to talk about those, and I'll certainly share those scans once you guys see what they are and what kind of sense they make. And then the questions and answer usually is the last 5 minutes if we have the time, and I'm sure we probably will. So let's bury that stack and take a look at my screen here. We'll start off with the SPY. And now I know there was a couple of familiar names in Jamie's webinar yesterday, and I'm going to probably repeat myself a little bit here, but these are my observations, okay? So here was the waltz, you know, January coming into the new year, and then it turned into just an angry mosh pit, and charts were breaking left and right, 12% corrections, giant bounces, giant down candles. Definitely not a waltz or any semblance of order that we have going right now. So, you know, some points of interest where the market, when it originally broke, was look at the volumes back here. Huge volumes on the downside. However, the last week after the bounce here, we've been bouncing right back up, and you can see visually on the volume bars there. We're basically bouncing back and getting half of it back, roughly, in the spiders anyway, on half the volume. So that's not exactly a win for the bulls. I mean, price action is price action, only price pays, but it would be nice to know there was some volume behind that bounce. The volume was essentially people getting out of stocks during that correction and not asking questions about it. Some other things, let's see. Let's take a look around the horn a little bit, because that's the S&P. I like to start with that one. But boy, technology is really leading the way. I mean, we almost got to a brand new all-time high in the Qs. So that is worth noting, just in the general picture. Off that bounce, off that lows, the NASDAQ was the most resilient with technology, with semiconductors and chips and some other things that I saw along the way. So the NASDAQ had the highest of the bounces. We'll get to today, but the Dow also kind of a half bounce. Lower volume versus where all the volatility was back here. It looks a lot like the SPYs. And then the Russell 2000, ooh, big red candle today in the Russell 2000. Okay, so before I kind of get too much in today, I want to talk just a little bit about what happened next week, and it'll dovetail into the trade of the week for sure. So this was all of last week, and this is, guys, this is why I like to use a 15-minute chart with no pre-market and no post-market, so I can just see a nice contiguous chain of price action without the break in the action. So what we had, this was last week, we had buying in the morning and selling in the afternoon, buying in the morning, selling in the afternoon, buying in the morning, selling in the afternoon, buying in the morning, selling in the afternoon. Then came Friday, and right about here, you know, we were doing our Friday tech support session, and going into the weekend, if I go back to my daily chart here, these were all those wicks I was just pointing to, buying in the morning, selling in the afternoon. I'm going to go back to the SPYs, excuse me. So buying in the morning, selling in the afternoon, and look at the declining 20. I kept really focusing on this and saying, as long as we keep wicking through that 20 and pulling back, you know, the bears are going to probably feel a bit emboldened. But the moment we break that tradition and close with a meaningful close above the declining 20, that's when I'm really going to get nervous about having a short position on, which we'll get to again. That was last week's SDSs. And so sure enough, close above there on Friday, no major news on over the weekend, and Monday a nice follow through into today. But what I want you to look at back here is this particular candle right here. I'm just going to put an arrow next to it so we really don't get confused on what the heck I'm about to say here. So that green arrow right there, you know, the market was having a tough go of it. We opened, gapped up, and then started to sell off into lows. Well, I look over at my friend Zero Hedge on Twitter, and he's probably about 8 seconds behind a Fed governor's comment. And what was the Fed governor's comment on Friday, going into the weekend with not a lot of hope? Basically, if I paraphrase, it was, hey, we're not objected to buying more bonds in the future if needed. Well, once the market heard that, that was it for the day. Okay, so you have the Fed starting to jawbone this market and basically held that 10-period moving average all day Friday. We come into Monday, bit of a gap up. Notice again the 10-period moving average I've been talking a lot about on my 15-minute chart came up to support the price, and boy, did it ever support the price, and continued to support the price throughout the day, even mildly into today. And then right here, which is the fun spot where the SDSs were stopped out basically by about 8 cents, we started having the Fed again coming back in and kind of counteracting what they were saying back here, saying, well, the economy is better than we thought. We may have to start raising rates faster than we thought. And then that spooked the market. So, I mean, guys, I'm just going to say it. You know, Andy and I are good at trading the market. We're not very good at predicting what the Fed is going to say. And not happy about it. It's not the market I want, but nothing I can do about it. We just got to take what we got. And the Fed has been extremely active in jawboning this market, up on Friday and down today. So again, I'm not one who likes to look at the fundamentals and look at data and macroeconomics and Fed policy. I like to follow price action, but when I see price action setting up to do one thing and then a offhanded comment by the Fed that moment and the reversal in price action, there's not much you can do to avoid, you know, thinking about what's going on out there. Anything I'm missing here, Andy?
No, I totally agree with you. I would like to see them out of the market forever. Never should be in it. And but anyway, we know that's not going to happen. But no, I totally agree with you. You got to have one eye on the market and one eye on the Fed, unfortunately. But
yeah,
know that they do have an influence. So
yeah,
we
that was always my
policy.
My greatest champion was Rand Paul's father, Ron Paul. I mean, he was one of the most leading vocals of saying, let's audit the Fed. Let's audit the Fed. What are you guys hiding? It's pretty secretive, but whatever. We're not able to change that, so we got to deal with the market that we have. So therefore, again, Q's leading on the way up. But what happened again today? The Fed started to jawbone this market again and saying that we may have to raise interest rates faster than we thought, almost completely contradicting what they said on Friday. So bottom line conclusion, we are not in a market of semblance. We are in a market of thrashing back and forth, looking for footing, looking for a direction. It's still kind of a broken market in my opinion. And so we have to proceed accordingly. And we'll kind of touch on that a little bit after the trade of the week. So with all that said, let's just go ahead and move into what our AI Holly did today. My first observations before I turn it over to Andy was, you know, we started the day kind of choppy. Let me go here and do entry time. Okay, so there's the first ones. Had about 5 longs come through, and then we had a couple shorts, a long and a short, and then more back to the longs, and then back to the short. So for those of you that have been watching the AI a lot, typically we have kind of a uniform directional bias in one direction or the other, which usually has been long lately. But today we got about half of both, or maybe a little bit less of shorts. But in the time sequence, that was the timing, longs to shorts, back to longs, back to shorts. Well, I mean, I don't even have to look at the risk on, risk off to know that risk off is going to be the, oops, what happened there? How did risk on finish the day better? Barely. Okay.
Yeah, I'm not sure about that last tick of the day, though.
I'm not sure about that last tick either.
Yeah. No,
because I feel that, you know, when the market goes solid, positive, and then back to red, and then back to unchanged, and then back to red, those are the days where the risk on is really not going to work on the longs. But that brings up a great point. What if I do this? What if I double click the risk on category? What starts to show up over here on the left side? Well, what Holly was basically signaling to us towards the second half of the day is that the shorts were working better than the longs. Without a doubt. That was definitely showing up here in terms of you know, the profit and loss column. And that's the kind of thing that, you know, the bigger picture of Holly can start to help create additional value. It's not always just on every individual trade. It's what's the trade frequency? How active is Holly? Well, Holly was kind of active today, but on both sides of the coin. However, I think what the AI was giving us today was a little bit of under the surface look. You know, everything was kind of rosy midday with the moving it with the indexes and ETFs. But as we started to bleed into the rest of the day and lift up the rug and look under the surface, the AI is showing us that the individual trades that were called short were accelerating in profit into the close. So I don't know how this is going to bode for tomorrow. When we get to the trade of the week, I'll probably have a little bit more to say about that, but that was my observation. I think there was one more thing that was interesting. This, yeah, once again, for people who are, you know, looking at my 15-minute chart, I mentioned yesterday, normally don't have any indicators on here, but I'm going to move forward because I used to use this all the time, and I'm once again finding value in it. And that's just one simple moving average on my 15-minute chart, which is a 10-period moving average. And what it's doing on the stocks that were in motion to the upside, as you can see towards the end of the day, as the moving average caught up, we never really had a close. Now, occasionally you'll see an intraday tick below it, but don't freak out. Wait for the close of the candle to see what it wants to do. And then there's two examples there where it tried to breach it and then closed back above the moving average. You know, the other thing that was using that 10-period moving average for a nice guiding hand today was the VIX. Look at that. Look at that. So there's the old insurance policy of people starting to wake up again and maybe feel like they were feeling a week ago, getting a little nervous and buying some insurance in case the market wants to correct again. But that 10-period moving average, again, tried to close below, couldn't. So 3 times today it tried to close below, but this is what I call the momentum line. Whether you're going up or down in price, if you're staying above or below this line, you are in momentum mode until further notice, which was basically kind of right here today in the spiders. As you see, we were coming into today with 2 days of nice momentum mode. Again, that's just really something to imprint on, guys. When you have a stock that gaps up, I always like to wait and see what's going to happen when this moving average starts to catch up to it from underneath. Are we going to bleed down through it and all bets are off? Or is it going to bounce right off it like it did perfectly there on Friday morning, and then Monday morning, excuse me, held it all day long, held it into today. Here we are today, and then the Fed starts speaking. We break it and we close below that moving average, and that was pretty much it for the rest of the day, guys. So I really like that 10-period SMA on my 15-minute charts, and it shows up sometimes. All right. You know, I might have Andrew, hold that question. I might have something for you to share in terms of rejection candles, because we're going to take a detour here and try and go to maybe a method that's going to turtle down and shrink in size and risk, and maybe focus on things like that until the market starts to show its hand a little bit better. But let's see what Andy had to say about Holly. I know I gave a couple of my observations. What did you see today?
Yeah, I had a couple of, actually one big one I thought is 30 minutes after the market opened, Holly sped out a couple of shorts. There, as a matter of fact, they're the top 2 ones are on your.
Okay, I'll go back to sorting, and it's these 2 right here. Okay.
Well, you can see the entry time. That was both of them were 30 minutes after the market opened, and I'm thinking,
what an entry.
Yeah, and I was thinking, whoa, gutsy call. Market, you know, kind of close to highs here, and Holly's doing a couple of shorts. But what was really interesting was 15 minutes later, when the market was at highs. If you put up the spiders real quick, Steve, and take a look at basically the 9:15 candle or 7:15 your time, you can see there. And I looked down at Holly's P&L, and the biggest gainers were those 2 shorts. And I'm going, very interesting.
So the market was at highs right here, and you were noticing that the AI was hooked on.
Yeah, that the shorts were the ones that was paying, and I was like, wow, very interesting. And then I also noticed Steve mentioned the VIX. I looked at my sector board, and VIX is one of the top ones on the board. So I'm like, you know that there's not a lot of leadership here. You know, VIX is close to the top. I think it was in 2nd or 3rd position, not far. And it was just a matter of time, well before the market went to lows, that VIX shot up and went to highs on my sector board. Just it's things like that, guys. When you start to just
puzzle
notice.
Pieces.
Yes, there's puzzle pieces out there, and if you're observing the market and you're noticing things like that, you can get a real strong inclination on what may be going on in the market, under the scenes or behind the scenes. Yeah, I thought that was, and if you look at the way the shorts performed today. Of course, that's hindsight at this point, but
yeah,
during real time, you can see a lot of this developing, during real time. And if you want to go over just real quickly a couple of those 2 top winners, they were beautiful.
Yeah, the entries were perfect. It's the kind of thing your eyeball doesn't look at for an entry like this. Stock gap down and coming up close, and statistical model unemotionally AI says this is a good spot to enter short, and you can see it bled through just a little bit. So for the people, you had a good 20 minutes here where the price was going back and forth at the entry level. No inability to participate in that one. And then obviously closing out on lows. Very nice day there. This one, SNH, another nice entry because it was actually positive for a little bit. And then it looks like it was this is cuts like a knife. Okay, so this is going to be a momentum scan. It's not going to be a fade the bounce. It's going to be more aggressively hit the bid at new lows, and that one looks like that one worked as well.
But look over there. Look over there at that daily, where it was on the daily. And if you were also, you would have noticed the relative volume at the time was high, and it was an earnings play. So a lot of stars lining up on that one, because you're looking over there where the Holly calls it way before it breaks that support on the daily there, and that was just I thought
here's when a single stock window comes in handy. Like, okay, what's going on here? What's the average? Oh, nice relative volume, great 5-minute volume. And, oh shit, earnings just happened. Oh, okay, so there's a new story. There might be a lot of extra meat on that bone to the downside if they missed on earnings. So if you're not using this single stock window, guys, with the relative volume and the 5-minute volume and the float and the short float and the earnings date and things like that, you're still missing, part of the picture, in my opinion, a little bit. All right. I see your question, Andrew. I don't know. You'll have to let me know at the end if it's something that you're looking for. Otherwise, if it's not what I'm going to talk about coming up here, then you can always email info@trade-ideas.com with a request for help on a scan for more specifics. But I'll really kind of point out what this one that I was going to talk about is looking for. So I think that takes us next to my not so favorite part here, because guys, it's been kind of a tricky month. Yeah, trade of the week. Okay, so what did we know coming into this week's trade of the week? Well, we knew that we had a SDS call, which was a call for the market to get caught up here and roll back over and go to lows. And if it did, that trade would have worked. But as I had mentioned on Friday, and to a couple of people that did email me, that look, once we closed above this 20-day moving average, I would not have faulted people for maybe moving their stop up a little bit closer and a little bit tighter, especially since we were in the money a couple times. It's never really fun to do that. Basically, that's Holly doing what she calls reduced risk. Time decay is just decaying, and now the price action is not doing what it was supposed to do, and now it's starting to slip away from us. Well, that's when Holly pulls a reduced risk and closes the trade early rather than a full time stop or a full price level stop. So, if we flip this upside down, it's really, actually, we got to do it this way. It's really, really discouraging, guys. And I'm going to tell you, it's not the first time it's happened, and it's probably not going to be the last time it happened. But this was our level pretty much right here on the stop. And the idea was, if this base didn't hold here on the SDS and the market didn't sell off, which means that this would have gone higher on a market sell-off, we started to bleed out of that. And so one big red candle right there, this is where I started telling people that were asking and curious, hey, you should probably really want to tighten this thing up. What's really unfortunate is if you look at the intraday, we were basically stopped out here. Well, there's the stop down there, actually, that green line. We were stopped out by about 8 cents, which is no fun, but it's going to lead me to this comment, all right? There's been a few paper cuts so far in the trade of the week this year, this month. It's been difficult, but I'm just going to, I'm going to say it. If you guys doing this and you want to trade and you can't handle paper cuts, then you better rethink everything, because there's going to be periods where things are slowing down. You have to take a few paper cuts. You have to be patient. You have to wait for things to start showing up again. I kind of feel that's where we are right now. It's a little dicey. It's a little difficult. We'll continue to try and do our best. But that said, that was the SDSs from a week ago. And coming into today, if they had not been stopped out, what we would have had was kind of a little mini portfolio that was hedged. We would have, let's visit eBay. Okay, this was 3 weeks ago. eBay here was our signal candle down here, and it's been slowly creeping higher and slowly creeping higher. And then I had a guy today tell me, he goes, I'm just not liking the market action. I'm going to take my money that I did make in eBay and get out. Thanks for the call. And I'm like, hey, I don't disagree with that call whatsoever. That's nothing wrong with taking profits if the overall market is going to start to give us fits and starts. So then coming into today, I said, hey, well, we're hedged. eBay is still open. The SDSs were open, and then we'll get to Under Armour in a second. But we got taken out just right here at the tippy top as the Fed started speaking. Unfortunately, just bad timing. But oh well, we have to adhere to what we talk about. So coming into this week, we did not want to go another short call. We did not want to say go to cash. We've done that. So we're trying to be as tight and conservative and be as dicey as we possibly can, stick and move in this market. And so we found UA that had earnings behind it last week, had a good nice 3 days. That seems to be the maximum amount of good movement in one direction these days, 3 days, and then a pullback. Well, a pullback to the 10-period moving average. So you know how much I like it on the intraday. Well, I also really like it on the daily chart as well. And so what we had was all these people up here that bought late, probably getting frustrated and stopping out and capitulating here. The price dug in on Friday. We had this one green candle right there. Perfect. That's what it looked like. There we go. That's what we had to look at on Friday, okay? Going into the weekend, earnings behind us, so no threat there. Here's a stock that's showing some strength, nice volume off that big move. The sell-off was on lower volume. That's what we want to see as bulls, not the opposite. And then this, moving average was a line that we wanted to trust and dig in. So I actually created a new scan, and point of clarification, we don't have a filter for the 10-period moving average, so I used the 8-period moving average, but I made it a little sloppy so it could trade through it if it had to, or be a bit above it if it had to, and then come and use visual confirmation. And once I saw on that pullback to the 8 SMA that Under Armour here was just resting beautifully on its 10-period moving average after 4 days of light volume sell-off, after earnings, after a nice move. This was it. I'll call this 100 times in a row. Mm-hmm. Next day was yesterday, a slight movement up. We got triggered at the end of the day, but boy, today was really goofy. I mean, this just drives me nuts. So what happened was, I think Andy and I were discussing this, is that Macy's had some decent earnings last night, and Dillard's, and they did the same thing. So what happened today? Everybody, money managers, big funds, who's the next rotation? Where's the next baton? Where do we go next? Well, Macy's and Dillard's had great earnings. So I think what really happened, guys, was that Under Armour benefited from a nice sector open in the market. The retail sector opened, exploded out of a cannon, and gave us nice alpha all the way up here to 1593. But we don't always necessarily handicap complete reversals, and then even more so. I don't like the way this chart looks now, guys. I think this chart's completely freaking broken, and I'm disappointed and I'm sad. And so I'm basically saying the trade ideas logic right here is showing the bottom two candles here is our smart stop of about 1496 or whatever that is. That's close enough for government work, right about there. 1496. I would take it one step below and just go to the bottom of that candle there, which is 1491. Now, I know the stop was probably lower, but I don't like the way it worked. Shot out of a cannon to the upside and then completely reversed and closed on lows. I don't like this. I don't like it at all. Do you like it, Andy?
No, I don't like it. If it were me, though, I'd probably give myself at least 10 or 15 cents below that candle, because I know what the algos will try to do. Just taking it right below to shake out. But no, I don't. I'm with you. I'm typically the kind of guy, when a stock doesn't do what I expect it to do, I get out. I get out quick. But
yep. So to me, this is kind of a rejection candle, like Andrew was just saying. I'm not happy about what could portend the day or two after a candle like this. Ideally, it should have held that moving average and at least closed above it, even if it was a doji or whatever. But I don't like it. So Andy and I are kind of in not total agreement about where to put your stop. But the point is, I think we're both in agreement that the stop needs to be tightened, because this thing is not behaving.
And let me add to this. When Steve and I, ran our fund where people would piggyback on our account and get the same trades as it's called Ditto Trade, and people were able to attach to our accounts. And when the market got like this, we would tighten everything up. We would go for less profits and have much tighter stops. Okay, trade of the week's a little different animal. Okay, we have to set it up for the longer term. Not the avid traders like we are, and like many of you are. But you have to adapt to what the market's giving you. And when you get in this mosh pit of a market that Steve's talking about, yes, you want to tighten things up. You want to tighten your stops up, and you want to maybe let your winners run less than what you're accustomed to, because like I mentioned the other day, this could very well be a market where we extended to the upside. We came down hard, 11, 12%, and now we're bouncing right back in the middle of the range, and we could just get a lot of sloppy action now going forward and be range bound. Time will tell. But when it gets like that, adapt your trading accordingly.
Mm-hmm. Yes, and thank you, Christopher. I neglected to put the 200-day on my other chart because I normally don't, but Christopher pointed out that it was also fighting hard, the 200-day, and if we had closed back above that, then I'd be singing a completely different tune right now.
Exactly.
So thank you for that reminder there as well, Christopher. So that's probably a great segue into, how do we, focus our energies going forward here in this market? And so a couple things of note, and I have a couple of scans here that I've used over the years, and sometimes they work great, sometimes they're just kind of sloppy. But today, the horseshoe up and horseshoe down, we had 4-to-1 on the downside versus the upside. And if I just look at each one of these individually, these are scans where stocks gapped down, came back up and chopped around, consolidated, and then went to a fresh new low. I'll draw that was the downside trigger on that one. TS today, the downside trigger was at 35.50, so it's basically the low of that opening candle right about there. Okay, so there was some nice follow through to the downside on that one. OEC, slight gap, chop sideways, and then this one was triggered at 28.50, which is right about here. And then the BPY, four out of four winners today on the horseshoe down for the most part, compared to the one horseshoe up, which was a fake out. Here was our horseshoe up, looked like it was going to go, and then a big fake out. So when I have two bullish and bearish scans side by side that are intraday type scalp scans, another little tip of the hat as to kind of what was working today and what wasn't working today. Both of these scans are on the PDF list that we have. So if you want a copy of it, you can email info@trade-ideas. We just updated the most recent PDF, and it's got a bunch of cloud links on there that will have those. So that was something of interest today that I was noticing, especially if we do get back into a downside market. This scan could be really interesting for, just 30, 45-minute holds or just a 60-minute scalp as stocks gap down, go sideways or up, and then roll back over to a new fresh low. And the reason I say I like this one better, because fear, as we know, if we just go back and take a look at the spiders, fear is a much more strong emotion than the greed was coming into that day. So these scans, the horseshoe down can be an interesting one for day traders that want to maybe scalp some quick momentum on a weekday. So where I was going to go next really was, I've got a couple scans and I haven't used them in a while, but I feel like if we're going to get back to quick hits, quick chop in out, don't go for the whole full 3-day move, too much volatility. I had one called bouncers. Let's just pull that one up from the cloud, and we'll find it by searching for bouncers. Here's my latest copy of bouncers, and let's see what we got today. Okay, I don't think bouncers had anything today. Let's take our history and look. Nothing today. What's bouncers looking for? Well, bouncers is looking for stocks that take out yesterday's low and then don't follow through, and they bounce right back up into the candle of yesterday's range. And sometimes there's 30, 40, 50 cents in there, that can be quickly scalped. And these are not fast moving trades either. These are just kind of slow moving stocks taking a breath, in and out, in and out. So that didn't work. So that, if you think about it, that's kind of a bullish scan, right? Because the stock kind of fakes to break out yesterday's low and then bounces back up into today. We had none of those today, just like we had really nothing on the upside gap up. But on the downside, let me go to history here, and we got three of them, it looks like. Okay, this is the exact opposite. Now I can give you guys kind of a visual of what this was looking for. So the last one of the day, oh boy, did that ever work. Well, let me start by looking at the daily chart. Okay, here's our daily chart. Here's yesterday's candle, and there's yesterday's high right there, about 27.63. And you can see it superimposing over to my other chart here. So today we open up, trade above for a little bit, chop around a little bit, and then as soon as we break yesterday's high, we get a signal to go short at about 27.42, it says. I'm sorry, 25. Wait a minute. I'm sorry, I'm on BPY. Which one am I on? Ah, I'm on the wrong. 27.58. Thank you. 27. Oh, that's a really, really, really nice entry. So this, I'm sorry, Andrew, is kind of where I'm talking to you, but I got a feeling it's not exactly what you're looking for. But what we're doing here, you can see there's the wick on the daily candle faking out, and then the price drops back into the range of yesterday and just continued on its way all day. Well, that was one. Let's see how USB did. Okay, there it is. Perfect on the daily chart. There's our little wick above, our rejection, and then as soon as the price came back down into the yesterday's range, 55.82 was our entry. And I will mark that up for you right there, plus or minus a penny. Not bad. A little bit of pain, but then back down, and then by the end of the day, a good one. Last one here, XHB. Well, this is a ETF for home builders, but still, price action is price action. Look, it took out yesterday's high on the open, and as soon as that red bar came back down into yesterday's range, we got our short signal at 42.61. Wow, that's really aggressive. I mean, I don't mean aggressive, I mean early. That's really early right there. So 3 really nice trades on what I'm calling this one is, let me go back to real time. This one's called fading tops. Fading topping tails. So sometimes they're going to have a little tail in there. It doesn't matter how long the tail is, but that is a short strategy that worked really well. When today the bouncers did not work at all. Bouncers are the complete opposite. They're going to be taking out yesterday's lows and then bouncing up into yesterday's range for a long-sided trade. So I was curious that that didn't work either. Let's see that. Andrew says that's what I'm talking about because most of us normally trade on the low time frame. Well, Andrew, I'll be happy to drop this in, and anybody else. What I'm going to do is I'm going to share this cloud link. We're going to go save and share to cloud, copy all, and then I'm going to drop this into the chat window. I'll call it fading top tails and paste. So for those of you that want it, the GoToWebinar floating toolbar has a little window called chat. If you click the triangle next to chat, it will expand the window, and when I click on that link, this is what it does. It takes me to a landing page, and this is really the easiest way to confirm. Okay, fading topping tails, that's the one I want, that's the title. The code is here, but it's also up here. The easiest thing to do is just grab the URL, and that is all you need. Once you've copied it, then you just go to your Trade Ideas toolbar, load from cloud. It's already loaded. Click the load button, and there's my duplicate copy. So that's how you can transpose a copy from the link that I dropped in the chat window into your wheelhouse there, guys. All right, that's kind of all I had. You know, again, the theme I'm trying to really hit home here are these 2 scans I just showed you, which are, 45, 50, 60-minute, quick ins, quick outs. Until the market has a bit more directional bias to it, it's probably going to continue to be noisy. And so that's why I kind of think like this fading tops or buying the bouncers just for 30 or 45 minutes is something that can be done until we get more of a market that's got some semblance to it.
I think you forgot to paste a link in the chat.
I don't. Oh, I got to click send. Thank you.
Yep, I did that last week.
See, it works for me because I clicked on it and went to the landing page, but thank you guys for being on top of this and letting me know that I did not hit send. So that fading topping tails is in there for now. And here's what I'm going to do. I'm just going to grab bouncers because there's nothing to say that tomorrow bouncers might start showing up again. And again, I'm focusing on these types of strategies because these are quick hits in and out. They're not 3-day swing trades, 3-day holds. They're just basically trying to time the jump rope of the market, of the heartbeat of the market. And we all see stocks that break yesterday's lows and then go nowhere and just turn and screw the shorts and blast it right back into yesterday's range. That's what bouncers is looking for. So let me, even though there's nothing in there today, doesn't mean there might be something in there of value tomorrow. Let's pop that in there as well. So you basically have both sides of this strategy that I've been kind of talking about here. So I'm going to type bouncers, Control V, and hit send this time. So there's a second link for you all if you want to experiment with bouncers. Okay, John, you should have it. Hopefully you've got the link there. If anybody watching the video later tonight wants these links, or if anybody was not able to get the link to transfer to their system, don't fret. We're here 24/7. Just email us at info@trade-ideas.com and say, hey, I'd really like to get those cloud links that I saw on the webinar on Tuesday. All right, are we caught up on questions here, Andy?
Yeah, I think so for the most part.
Well, we got about 5 or 6 minutes, so why don't we open up the floor for questions? Stock, chart, trading related, trade ideas, scan related, whatever you guys want. Christopher's ready. Okay, and Kay, you do bring up a good point. I'll go ahead and I'm going to drop in the horseshoe up and the horseshoe downs too. So hold on there a second, Christopher. I'll get to that. Kay does bring up a good point. If I've talked about something, there's no point in me not sharing it. So let's start with the horseshoe up. We'll drop this into the chat window. Horseshoe up, Control paste, enter, and the horseshoe down. Save and share, copy, horseshoe down, paste. And that was the one that was working better of the two this morning. All right, back to questions. Christopher is ARWR long, looking to go long. Thank you. That's a big difference between being long and looking to go long. So let's take a look at ARWR. First thing we do is the daily chart. Don't care about the intraday. I care about the daily chart. Well, nice looking chart. Nice looking trend. Higher lows in the bigger picture. Higher low here, higher low here. We had 2 really nice days of blast off, and then it looks like we just kind of ran smack into the 52-week high. I don't really see a giant short float on this, so that's not really the reason it's running higher. What you could have here is a go, pause, go, but, which means big candle followed by a doji, smaller candle near the top. I think if it takes out, and let me just say that when we see the go, pause, go setup, usually the playbook calls for looking at today's doji and using the high or the low. In this case, we would expect the high. So not only does today's doji high correspond with this high back here in January, that's probably your bogey. If this thing can get above there and hold it, that might be your entry. Ideally, maybe it sells off another 2 or 3 days and flags a little bit. When stocks get up here at this high and start knocking on the ceiling, I start really paying attention as to how much energy they expended just to get to the ceiling. And so a couple of days of rest and pulling back on that battering ram might be the order of the day. In other words, I'd probably rather see this take a couple days to blast through rather than blasting through tomorrow, unless there's
let that 10 period come up under there and cup it. Yeah.
True, exactly. It's right here. It might come up and be right about here in about 3 days, and maybe the 620 area might look interesting. But I don't have a lot of faith always when I see stocks that wasted a lot of energy getting back up to their levels of resistance. It's hard for them to blow through like butter and then continue on. So I like to see some consolidation on the sideways side of those things. All right. Is the trade of the week based on the same calculation as the swing trade interface? No, that's actually 2 different things, Carl. Sean McLaughlin has been using some of the Holly calls and then blogging about some of the nicer charts he sees, because we understand not everybody's got a 10,000 hours of history of looking at charts, and they'd like some ideas and to things to look at to help Holly get to the next level of a swing trade, and some charts do look better than others. So it's the trade of the week is something that's more curated by myself and Andy mostly, and a few of the other guys on the weekends, trying to use one of the custom scans that we have that we showcase during the week. There's been a couple of weeks where we have seen something on Holly that we really liked on a Friday and went around and turned that into a trade of the week, but for the most part, it's more of a curated process based on our custom scans. Do I have a favorite time period for the hammer? Yeah, it would be the daily chart. But if it wasn't the daily chart, Marcia, my favorite time frame would be a 60-minute hammer. I think there could be some value in that. And let me just quickly orient you to that and anybody else that's interested. New alert window. We're going to go to search. We're going to type in our keyword, hammer. Hammer time. and it's the longest period. The longer the period of the hammer, the more I like it. So that's why I said I prefer daily. But intraday, you guys could try and experiment with some scans, maybe using a 60-minute hammer, maybe a couple of down consecutive 60-minute candles coming into the 60-minute hammer. And the way Trade Ideas does it is once the 60-minute candle is completed, and it is in fact a hammer and it's complete, that's when the trigger will come, and the chart will actually start working on the very next candle. But this is our signal candle. So that's my favorite of the hammers, aside from the daily. Okay, where are we? Sorry, Raul, if you're having trouble linking TI to Thinkorswim, you're going to have to, do a support ticket. Probably talk to Bill. Bill's the guy for that.
I dropped it in there too in the answer. Just come into our our website there at trade-ideas.com. Come in the chat between 9 and 4:30 Eastern time. Somebody can help you.
Okay. Okay, Kirk, if the one horseshoe up is called false gap up, you can always change the name. Quickly, everybody, here's how you change the name to suit what you want to have. Right-click, configure. The very last tab is summary, and then we could just change it to horseshoe up. I had wait 30 minutes in there because that's actually a filter, which is required for that scan to wait 30 minutes for something to come in for the day. So that's how you would change the title of the scan if you're interested. There was one more here. Oh, you mentioned you'll be starting classes. Will these classes be for trading? I don't just mean learning TI, but learning how to trade. Well, Kay, it's really going to depend on the flow of what's happening that day. If we've got 8 people that come in and they're very inexperienced with trade ideas and how do I do this, how do I do that? Well, most of the day will probably be taken up. Most of the session will be taken up going over those questions. But if we have a slow day and a lull and there's not a lot going on, oh yeah, we're happy to talk about trading tactics and ideas and to try and help your guys' learning curve. So, those classes, when they start, keep an eye out for the emails. There'll be a lot more content that'll be coming out for you next week. We'll just kind of handle those sessions as they go and let the audience kind of dictate where we go. A lot of times audience members can learn a lot off of other people's questions. Yes, the chat room, the live trading room does always talk about the AI Holly signals, and Barry gives a great assessment of what he thinks about them as they come out in real time. So Lawrence, if you're not in the live trading room, it's a good place to get a lot of information. We've had a forum, Marcia, in the past. The forum is kind of old school. We're doing so many webinars a day. We have so much access to live support. We just don't really feel that we have to also manage a forum in addition to everything else that we're doing. That's kind of 2005. I guess that's it. Did I miss any?
No, it looks like we got them.
Okay. And Mark, again, Sean here at Trade Ideas, he's taking a lot of the Holly trades and trying to curate them to help show people which ones he thinks are doing well for possible future swing trades. His name's Sean McLaughlin. He works here, but you can also follow him on Twitter. It's a very simple name. It's @ChicagoSean. And he's going to be doing a lot more on the longer term swing trade stuff, pulling a lot of the content from the AI. So with that, I think we're good. Thank you all for showing up. Hopefully next week we'll have a little bit more meat on a trade of the week that's going to work for us. But I'm not one to make excuses, but it's hard to trade price action when the Fed keeps jumping in and jawboning the market up and down. So it is what it is. We just got to deal with it. All right. Thank you all for the comments. Scott, why don't you come on in and tell us what we can do to save some money for those that need it.
Yeah, it sounds good. I think there's a couple things. We have a podcast that comes out every Friday, so everyone should be subscribed to that. Just make sure you search for Trade Ideas Podcast in whatever application you listen to podcasts in, and it'll pop right up. You can just start a subscription there and then also download previous episodes. Last Friday's was good. We had Michael Noss, the new guy, on not this last Friday, but the Friday before, and that's a great episode about auto trading and using algo trading. So do make sure you're a subscriber, and we'll have a new one out this Friday. Steve and Andy and Jamie and Sean all participated in writing a nice ebook, and it's there to help you navigate choppy waters when the market's no longer performing in a bullish pattern where you can just buy the dip and move on. It's going to get hairy, so you should have some strategies in mind. TradeIdeas.com/ebook, and just put in your email, and you get the download link to your email. It's really easy. It's a nice collection of strategies. No reason not to have that in your toolbox. We have a discount code good for the rest of this month.
Oops, I clicked on
it. Yeah, you only got a couple days left to use this code. Love for Holly, all caps, and that'll save you 15% off your first month or year of any of the Trade Ideas subscriptions. You can start for as low as like under $3 a day, so no excuse not to get in there, guys. If you want to upgrade, you can also apply that code. Just go to our tradeIdeas.com, use the login link in the upper right, click on change your subscription, and apply that code when you're getting the new one. You can also save on the first installment of your new upgrade. Thanks, everyone. This webinar was recorded. We'll have it up later on tonight. By tomorrow morning, you get an email reminder tomorrow where to find that replay. Thank you, Steve. Thank you, Andy.
All right. Thanks, Scott and Steve. Thanks, everybody.
Okay.
Shoot us an
See
email.
you on the next webinar.
See you Thursday.
Send us an email to info@tradeIdeas.com if you got any questions. Thanks, guys. Bye.
Bye-bye.